Let's welcome in Ryan Detrick, Senior Market Strategist at LPL Financial. Ryan, December historically the best market or best month for the market. In fact, it's never been the worst month to any year ever. But after a November to remember and really a year to remember, is there any sign that this December may be historically weak, break its normal trend?
First off, Brian, thanks for having me back. You know, when you get down to December, you're right, Brian, up 1.6% for the S&P 500, higher about 3 out of every 4 times. So those are the two strongest out of all 12 months. Now, what's interesting, though, Brian, when the S&P is up 15% for the year coming into December and above its 200-day moving average, like we're going to be this year, the returns actually get better, 1.7% and 2% on average. So could we see finally, after a year without so much as a 3% correction? We think, yes, some little volatility early in the month could be likely, but all in all, it still looks pretty good for maybe Santa Claus to come. And the other thing, Brian, I want to touch on, I know you love these stats. That's right. The month of December has never been the worst month of the year. And when you consider, going back to 1928, when you consider the worst month so far this year was March at down 4 basis points. That's negative 0.04%. If history holds true, we could have another green Christmas and another green December here.
That was our worst month this year, was down 0.04%.
Yes, and that's on a price return. Brian, if you actually look at total return, obviously including dividends, that was positive. We could have the first year in the history of stock markets, at least in the U.S. here, all 12 months positive on a total return basis.
Wait, that's never happened,
Truly
Ryan. That's
amazing.
never happened.
That's
all 12 months positive.
January through December, that's never happened before.
Even
Brian.
on
We've
a year
had long win
like
streaks
95
before.
where we rose 33% or something like that for the Dow? Wow.
That's exactly. We did see, I don't know off the top of my head, Brian, but we did have a negative month or two in there, even though we had a really strong run. So we're seeing truly historic markets this year.
One more to go here. Let's talk about next year, though, right? Forget about the 2017
right.
Is so 2017. You guys just releasing your 2018 outlook. How does it look?
All in all, Brian, it still looks pretty good to us. Our 2018 outlook, we just released it. We called it a return to the business cycle. What's that mean? We've had all this monetary policy that's been leading us really for years. What's that done? Increased stock prices, but really, Brian, the economy hasn't done that well. We think going into next year with the fiscal coordination that's coming, look at the last couple days with just the chance of tax reform coming in here with the Senate voting very soon, we've had big rallies. We think being with fiscal things coming into play, that can be really positive next year. But Brian, the big thing that's different about this year and next year than we've seen any time since 2010, earnings. We've had positive earnings in the U.S., we've had positive earnings in emerging markets and developed markets this year, and it should happen again next year. We haven't seen anything like that since 2010. So this is a global recovery led by earnings. And what lead long-term gains? Normally it's earnings. There's a lot of opportunities for global investors and for investors here in the U.S. still.
Wow. Ryan Detrick, Senior Market Strategist, LPL Financial. One more month and we could have literally a historical rally. Ryan, thank you very much for joining us.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.